All right, let's dive in. Today, we're going to take the pulse of the fintech market, but we're doing it through the lens of three totally different companies. We've got a newcomer, a real power player, and an adapter. Let's get to it.
This one quote, it just nails the chaotic energy of the fintech world right now. So we're going to break it down. We'll look at the whole welcome to the public markets thing with a company called Agibank, see what buying our own stock looks like with Shopify, and then figure out what happens when your job got replaced at LendingTree. Three companies, three very different stories.
Okay, first up, Agibank. Their big debut on the New York Stock Exchange, it wasn't exactly a champagne-popping party. It was more like a trial by fire, a really tough introduction to the big leagues of public markets.
So what exactly went down? Well, Agibank priced its IPO at $12 a share, but the second that opening bell rang, the stock immediately started trading for around 11. This is what's called breaking issue, and it's pretty much the market's polite or not so polite way of saying, we're not quite buying that price you came up with.
Now, to get why the market was a little hesitant, you got to understand Agibank's business. They're a digital bank in Brazil, and their main thing is payroll-linked loans. I love how this slide puts it, they're a credit engine in a fintech skin suit. And that's the key right there. It means their entire success is tied to how well their loans perform in one single emerging market. For public investors, that screams risk. And this quote, this is basically the market's instant reaction. See, public investors don't really care about a cool story or a fancy mission statement. They want to see the numbers. They demand cold, hard proof of performance, not just a slick pitch deck. They want the receipts.
So here's the bottom line for Agibank. The game is completely changed for them. They're not a private startup selling a vision anymore. Now they've got to prove, quarter after quarter, that their business can actually make money consistently and survive the ups and downs. That's the only way they're going to win over those skeptical investors.
Okay, let's completely switch gears and talk about our next character, Shopify. The whole vibe here is different. We're going from the anxiety of a newcomer to the absolute confidence and raw financial power of a company at the top of its game. Just look at this number to start. Shopify raked in almost $3.7 billion in revenue in the fourth quarter alone. That's a 31% jump from the year before, which is just insane. It shows that even at this massive size, their growth engine is absolutely humming. And it's not just about sales. They generated $715 million in free cash flow. In just one quarter, free cash flow is what really matters. It's the actual cash a company has left over after paying all the bills. It's a pure sign of financial muscle.
And here it is, the real power move. The board gave the green light for a $2 billion share buyback. This is the ultimate sign of confidence. Management is basically shouting to the market, we think our own stock is a bargain, and we're putting $2 billion of our own money on the line to prove it.
I mean, this slide just captures it perfectly, doesn't it? It's a total flex. It's a spotlight moment. While a lot of other tech companies are scrambling just to show a profit, Shopify is using its mountain of cash to send a message. We are a powerhouse, we are profitable, and we're not going anywhere. So the big takeaway here is just how unique Shopify's position is. They're showing the wild growth you'd expect from a startup platform, but they're also acting with the financial strength of a mature blue-chip company. They're basically playing two different games at the same time, and winning both.
All right, for our final story, let's turn to LendingTree. This one is all about evolution. It's about how a veteran player in the game has to pivot and embrace things like AI and automation just to stay in the race.
Okay, first you have to get how their business works. LendingTree is a marketplace. Their whole world revolves around this funnel. First, they have to get people, traffic, to their website. Then, they capture those visitors as leads. After that, they convert those leads by matching them with a loan or a credit card. And finally, boom, they get paid. Every single step of this funnel is a place they can get smarter and more efficient. Now, this is really the heart of the story. LendingTree's job cuts, they're not just about saving money. It's a deep, strategic shift. You can see they're cutting roles that are repetitive, manual stuff, and pouring all those resources into hiring hardcore technical talent, like data scientists and engineers. This is a pretty clear signal about where work is headed, right? They are systematically replacing human processes with automated, data-driven systems. It's not just changing how the work gets done, it's changing the skills you need to do the work. The value is shifting away from repetitive tasks and towards people who can build these new automated systems. So here's the crucial point. For a marketplace like LendingTree, having a competitive advantage, a moat that protects your business, isn't just about having a famous brand anymore. It's about being the most efficient machine out there. They're rebuilding around automation, not because it's a cool buzzword, but because it is absolutely essential for their survival.
Okay, let's pull it all together. We've looked at 3 really different stories, but each one teaches us a powerful lesson about what it takes to make it in the fintech market right now.
So let's just run through the summary. First, Agibank's shaky IPO is a stark reminder that public markets want proof, not just a good story. Next, Shopify's massive buyback shows that a true power player can have it all: explosive growth and mature financial strength. And finally, LendingTree's AI pivot teaches us that for the veterans, adapting through automation isn't just a good idea, it's the only way to survive. And that really brings us to the final question. These 3 roles, the newcomer fighting to prove themselves, the power player flexing their strength, and the adapter rebuilding to stay alive, they pretty much define the entire fintech landscape today. So, as you look around, which one are you seeing play out? Thanks for watching.